$200 million in ransom. A country's critical infrastructure paralyzed. State secrets stolen. This isn't a Hollywood movie. It's the reality of digital warfare. And your company, your investments, your digital life, they're all on the front lines. In this battlefield, one company has positioned itself as the wall, the fortress, the guardian. Its name, Palo Alto Networks. Ticker symbol, PANW. In the next few minutes, we're going to do the deepest dive you've ever seen into PANW. We'll go beyond the obvious to understand if it's truly a once-in-a-generation opportunity or a giant about to stumble. Let's get started. Welcome, investors. Before we talk about a single company, we need to understand the world it lives in. The global cybersecurity market already exceeds $130 billion and is growing at a dizzying pace. Why? Three major trends are driving this. Think about a company 20 years ago. It was a castle with a moat. All data was inside a data center, protected by a firewall. Today, that castle has dissolved. Data is in the cloud, employees work from home, and every mobile phone is an entry point. The attack surface has grown exponentially. Attacks are no longer carried out by teenage hackers in their basements. They are state-level operations with armies of engineers and artificial intelligence. They don't just seek money, they seek destabilization. A data breach today can bankrupt a company. Fines like GDPR in Europe, brand damage, loss of customer trust. The cost is simply too high to ignore. Cybersecurity has gone from being an IT cost to a pillar of business strategy, discussed in the boardroom. It's in this scenario of absolute necessity that Palo Alto Networks has become indispensable. The birth of a giant. Every great company has an origin story. Palo Alto's begins in 2005 with Nir Zuk, a brilliant engineer who had already been a key player in giants like Check Point. Zuk saw that traditional firewalls were dumb. They only blocked ports and addresses, but didn't understand the applications passing through them. He created the next-generation firewall, NGFW, an intelligent firewall that revolutionized network security. The company grew steadily, but the big strategic turning point came in 2018 with the arrival of CEO Nikesh Arora. Coming from very high-level positions at Google and SoftBank, Arora saw that the future wasn't just selling boxes of firewalls. The future was an integrated platform. He initiated an aggressive series of acquisitions and investments to build the company's other two pillars, cloud security and automated security operations. He transformed Palo Alto from a niche leader into a dominant force across the entire cybersecurity spectrum. Deconstructing the fortress, what it does. To understand the investment thesis, you need to understand what Palo Alto sells. There are three platforms that talk to each other. One, this is the foundation, the evolution of Nir Zuk's original firewall. Today, the flagship here is the concept of SaaS, or Secure Access Service Edge. Forget the complicated names. Think of it this way. With remote work, companies need to extend their secure network to each employee's home. SASE does this by combining networking, WAN, and security, firewall, etc., into a single cloud service. It's modern perimeter protection. 2. Companies are building their new castles in the cloud, AWS, Azure, Google Cloud. But cloud security is complex. Prisma is a CNAPP, Cloud Native Application Protection Platform. It protects the entire lifecycle of a cloud application, from the code a developer writes to the application running in production. It's security for the world's new data center. 3. This is the most futuristic pillar. Cortex uses artificial intelligence to automate defense. It includes XDR, Extended Detection and Response. It collects data from the entire infrastructure, network, cloud, endpoints, to find threats that would otherwise go unnoticed. SOAR, Security Orchestration, Automation, and Response. When a threat is detected, SOAR acts automatically, following a playbook to isolate the problem and resolve it in seconds without human intervention. It's your army of robot security analysts, working 24/7. The economic moat. Okay, the technology is impressive, but what stops another company from copying it? This is where the concept of an economic moat, popularized by Warren Buffett, comes in. Palo Alto has 3 layers of defense. As we've seen, companies are tired of managing 80 different security tools. Palo Alto offers the complete suite. For a CSO, Chief Information Security Officer, the simplicity of having a single vendor, a single interface, and data that correlates across network, cloud, and endpoints is a huge advantage. Palo Alto doesn't sell a product, it sells the solution to complexity. This is key. Once PANW's platform is integrated into a company's infrastructure, with all its policies and rules configured, removing it is a very high-risk operation. It's like trying to change the foundation of a building under construction. The cost, time, and risk of being vulnerable during the transition make customers extremely resistant to change. Cortex's AI feeds on threat data. Palo Alto protects the largest companies in the world. This means it sees more attacks, more malware, and more tactics than anyone else. Every attack detected at a client in Australia instantly improves the defense of a client in Brazil. More clients generate more data, which makes the AI smarter, leading to better protection. It's a self-reinforcing cycle that creates a massive barrier to entry. The arena of titans, competition. Palo Alto is not alone. The competition is fierce. In network, Strata, it faces giants like Fortinet and Checkpoint, who compete strongly, often with more aggressive pricing. In cloud, Prisma, the fight is with specialists like Zscaler. In operations endpoints, Cortex, the battle is against market darlings, CrowdStrike and SentinelOne. Competitors' strategy is generally to be best of breed in a single niche. Palo Alto's thesis is that an integrated platform, even if an individual module isn't the absolute number one, is better overall than a patchwork of point solutions. So far, the market consolidation trend is proving Palo Alto's strategy correct. Quote, financial strength. Let's look at the numbers. Palo Alto's revenue has grown at a projected compound annual growth rate of 13% for the next 5 years. But the most important thing is the quality of that growth. In 2023, the company finally achieved consistent profitability. This shows maturity. More importantly, it shows operating leverage. This means that as revenue grows, R&D and sales and marketing costs are decreasing as a percentage of revenue. The company is becoming more efficient with every dollar that comes in. The financial position is a fortress, around $3 billion in cash and investments and no debt. This gives flexibility to invest and make strategic acquisitions. As we've already mentioned, the net revenue retention, NRR, of 120% is spectacular. It proves that the land and expand model works. They enter a client with one solution, and year after year, that client spends 20% more with them. This is predictable, high-quality growth. The red flags, risks and uncertainties. Now, the points that might keep you up at night. No investment is guaranteed. Execution risk in acquisitions. The proposed acquisition of CyberArk for $25 billion is an example. It's a giant acquisition in an area, identity security, where Palo Alto was not an expert. If the integration fails, or if they overpaid, it could destroy shareholder value. High valuation. A fantastic company doesn't necessarily mean a good investment if you pay too much. Palo Alto trades at high multiples. Market optimism is already largely priced into the stock. Any disappointment in results could lead to sharp declines. The innovation treadmill? This risk is permanent. The company needs to keep running faster than the competition. A strategic mistake, a wrong bet on a technology, could open the door for an agile competitor to gain ground. The verdict. We've reached the end of our journey. Let's weigh everything. The bull case. Leader in an essential and growing market. Robust economic moat with switching costs, integrated platform and network effect. Solid financials, growing profitability, and an NRR that proves the strength of the business model. Visionary leadership with a proven track record of execution. The bear case. Integration risks in massive acquisitions. Stretched valuation that leaves no room for error. Fierce competition from extremely competent niche players. The decision to invest in Palo Alto Networks is a bet on the continuation of its leadership and on the thesis that, in the complex world of cybersecurity, an integrated platform will always beat a collection of isolated products. The industry tailwinds are undeniable. The company's execution so far has been exemplary. The question you, the investor, must ask yourself is, does the current price justify entering this digital fortress for a long-term journey? I'd love to hear your opinion. Leave a comment below about what you think of Palo Alto Networks. If this analysis helped you better understand the company, give it a like and subscribe to the channel for more videos like this. Thank you very much for watching. A big hug and happy investing.